Good afternoon, everybody. Can everyone hear my voice okay and see a screen? Welcome, welcome, welcome. If you wouldn't mind, just drop a note in the comments box. Cool, Bob. Welcome. Thank you, Dave. And it is awesome to see you. Wussies! Good to see you, George. Welcome, everybody. And Happy New Year, 2025. We survived to see another year. Salute. Today, markets closed with former President Jimmy Carter's ceremonial activities, and so we're going to take a slightly different tack this afternoon and look at a few different things, offer some suggestions, discuss how the program we are offering customers is different from other offerings, and hopefully give some of you a sense of hope going into the new year, talking about opportunities that I'm sure are going to be available. Welcome to those of you whose names I recognized. It's really great to see here. Alan, great to see you down in Australia as well. Good day. And we'll just sort of pick up with a brief understanding what we do differently. I spend a considerable amount of time on social media now as we've developed our own programs. You can find us on YouTube and Facebook and Instagram and TikTok and all across the interwebs now, offering training advice and trading advice and screenshots of methods that we teach in our courses, and I encourage you to sign up and be a part of any of those. This video, for example, will be available on YouTube this evening or tomorrow morning once it's finished. If you have to leave, don't forget to subscribe and click on that little notification icon to find out when it's ready to review. And I'm overwhelmed by the rapidly expanding universe of influencers and gurus who are leveraging every AI tool, every social media gizmo to put their e-course, their training stuff, their little trading view indicator up in front of people who are asking the question, can anyone really make money trading? And this applies to stocks and options as well as crypto, and especially futures. We started out as a futures company, and now our tools comprehensively analyze virtually every market you want to look at. And so I want to talk a little bit about that for someone who's maybe looking at us for the first time. We believe that markets have an element of time involved. You can look at the price bars all that you want, volume, price action, trend line, support and resistance, all that fun stuff. All of those things, I believe, can be manipulated. And so to prove that time is as important as I think it is, we give out the date 2 days before every webinar, usually the times and directions that we're expecting popularly traded markets to move, like oil and gold and the S&P futures and Ethereum and the euro dollar, on and on and on. And so we remove this element of guru, this icky guru blech, where you just feel dirty clicking on an email or clicking on a Facebook offer, like, oh, what am I inviting into my life? This is a mistake. I'm sure it is. If it's so good, why are they selling it? Those questions, right? And so what it really kind of boils down to is this element of timing. Let's see if I can find that quote. This guy here is sort of used to be my idol. I actually think I know more than he did back in the day. His name's William Delbert Gann. And when you're really famous, they name an indicator after you, and you may have seen a Gann fan in your indicator list. Ironically, it was probably one of the least significant contributions Gann made to markets. And his opinion was that, hey, time is the most important part of markets. He later goes on to say something along the lines of, if you study time, you'll be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. He goes on to talk about the law of vibration as well, but that's not here for us today to talk about. Our charts are really simple in relation to what people are looking to accomplish. You're wagering money that the value of the instrument you're participating with will be higher or lower in the future. Okay, this is important. Back to the future trading. You're coming with your best guess as to whether or not markets will be higher or lower. 99% of everything you will see is based entirely on what has happened in the past recently or what has just happened. Somebody may say things like, that was a high volume climax candle, already happened. Somebody might say, this is a break of a very important trend line. It has already happened. Our moving average is at such and such of a level with a 14, 20, 50, 100, 200 period moving average. That's already happened. Well, intra-candle volume analysis shows a majority of orders were at the bottom of the candle. It's already happened. There's a great line from the cartoon movie The Lion King. It's in the past. It's already in the past. It can't hurt you. But following that line of thinking of something having already transpired is extremely dangerous. It's available to market manipulation. For example, if you're following volume, again, something that is measuring a past event, companies like JP Morgan and Goldman Sachs have figured out how to spoof the markets. They make orders appear in real time that were never there. I don't know how. I still don't know what cryptocurrency is, and I'm paying attention. I don't know how you can spoof, but they do it. And people watch the volume and they watch the order flow. Order flow is a big thing, and people are watching it. And it's a mirage, it's an illusion. It's in the past or it just happened. We're a company that's focused on the future. So when you look at our charts, there are 12,000 lines of code, literally 12,000 lines of code giving us information that something in the past or something presently can't afford to provide for us. Here's a chart, it's a daily chart of Bitcoin. And you'll see Bitcoin on a daily chart. These are each one 24-hour bar of Bitcoin movement. And our charts are different in that on the left-hand side, you'll see signals that have passed. In the middle of the chart, where the price bar is now at the bottom, there's a dotted white line that tells us where we are now. You are here right now. Now, here's where things get wonderful. This is miraculous. It's the coolest thing that very few people know about or talk about. This is what's expected next, or the future. We are the only company that I'm aware of now, close to 20 years, over 15, that's telling people, hey, there's a guess that has powerful statistics behind it as to when a move will occur in the future. Meaning, when we were sitting here on December 31st, there were no price bars after that bar. There were none. It was empty. Nada. And we told people in social media, our customers in the Skype group, Bitcoin is poised to go up again until January 7th. You see, when you're working with future information, you can tell people confidently the date, the minute, the direction. We can do this on a daily chart, a weekly chart, a 1-minute chart, a 30-second chart, a 15-minute chart. And so when we warned people about the move up on October 1st, look at where the price of Bitcoin was and where it finished by the 24th. The 24th was a time we expected selling, or in this instance, profit taking of Bitcoin. Then the next warning, predictively, remember, there were no price bars to the right of 11.4, just blue and white dots. And we warned people on November 4th, the close of that bar. Look what happened on the close of that bar until the next expected selling date. Whee! Up we go. Same thing here, close of November 15th until November 29th, straight up. Close here until here tells us a very important story. The signal on December 11th, who's ever participating in manipulating this market, and make no mistake, if there's a market that can be traded, it's being manipulated. We finish exactly where we started, right? Things start off well and we go straight up off of the buy signal. And then what happens? We finish where we started. And this can be an important piece of information. If we're trying to track the people that are following or manipulating this market, what the heck is going on here? We arrive at the next date, the one we told everybody out on December 31st. If you bought Bitcoin, it went from 93.3 up to 10,000, 102,000, almost $10,000 move, a 10% move. These are not small moves at these signals. Only this time, Earl, what happened? When we got to the next signal, we had a lower high. That high also tended to reflect this price again, 100,000, 226, 225 area. And so right here internally, our social media, we're making warnings. We're saying, hey, whoever's been running this thing up has been systematically taking their profits and their principal and leaving the room. And we said, get out, get out. If you were long on the 31st, leave. And so when you start to put that picture together, boy, don't the signals on February 2nd and February 17th and February 26th and March 3rd and March 11th tend to hold some weight? You go, oh, man, if I had bought Bitcoin or Bitcoin futures on those days and exited by the corresponding sell date, I was crushing it. I was doing really well. Ian, this is a 714 swing strength 8 calendar day chart. Greetings. Forgive me today, I'm parched. Okay, so one of the very first things that we realize is, holy cow, the dead guy from Texas was right. If you study the way market moves, when markets move, if we look at this vertical axis of time, we can project in the future when the manipulators, when the participants are likely to push prices higher and lower. Let's take a look at gold futures. And I had a gold futures chart up here. Here's way down on the lower scale of things, right? So here's the Euro market today through the US market. And I just sort of want to direct your attention to what's happening at these signals, even on this wonky day, right? It might as well be Bitcoin. If the market is trending up, what happened at 4:50 Eastern, 6 a.m. Eastern, 7:25 Eastern, and 8:35 Eastern? And watch that same mentality, right? You notice Ian at 8:35 when we got to 9:50, doesn't it do the same thing that Bitcoin did? We finish where we started. Let's write that down. Finished where they started. And so if we didn't know anything about the rest of the signals for the rest of the day, by the time we got to 9:50, what do we have a pretty good idea, Alan, is about to happen? Well, if they finished where they started and it was time for them to buy, maybe this is the high. And maybe we should sell it at 9:50 because the trend is probably going to reverse. You see how this can act like a thermometer, a time-based thermometer? All right, go. Give me all you got. 50 jumping jacks. Great. Okay, and go. And then we start the timer, and our friend goes, and we give him another 60 seconds, and stop. All right, 30 jumping jacks. And start. And stop. Half a jumping jack. I think he's toast. Yeah, I don't think he's got any more in him. That element of time can provide a benchmark. Hey, we were supposed to go higher. You were supposed to give me a lot of jumping jacks, and you threw up and laid down. I came in and you were unconscious in a pool of your own vomit. I think he's finished. And so now, instead of buying at 10:05, look, it doesn't even go up from the close of the candle. It just falls. Now I'm thinking about selling at 9:50, selling at 11:25, and selling at 1:20. If I buy at 12:45, what's my risk? Just underneath that candle. Yeah, Ian, that's a little higher level. I was going to talk about that concept. If you want, I can lean into it a little bit, because there's something that happened on the daily chart on the E-mini S&P a little while back. We can lean into that for sure if you want. And so when we look at markets like oil futures, for example, we're addressing fundamental flaws or addressing key defense mechanisms in humans attempting to trade. When you try to trade, you're bringing to the surface, flushing the most powerfully evolved defense mechanisms, psychologically speaking, in human history. I'm going to reach into my wallet and I'm going to take money that was safe. This is a great way to describe it, isn't it? I'm going to reach into my wallet and I'm going to take money that was safe. No one could touch it. It's there and I can do things with it. And I'm about to put it in my broker's hands and guess. And now not only guess, but guess in a way where psychologically I'm going to self-sabotage. I'm going to put my stop too far away, watch it get hit, and then go straight to my target that it gets missed by the tick. I'm going to trade 35 times and spend what I gave the broker 100 times over in commissions. Overtrading, huge stop losses, tiny, tiny targets. It's a universal human condition. And now I look at this chart and say, well, what direction is the trend? The trend is up. Banks are buying. Okay, I'm going to buy from 906 to 948. It's an $100 move. I'm going to buy from 1042 until 11 o'clock. It's a $50 move. I'm going to buy from 1103 until 1127. $200, $250, $360. Ah, if you have 20 Apex accounts, you just made $6,000. There's a Southern lady on YouTube who trades while she breastfeeds a baby. Do you know who I'm talking about? Tell me if you know the influencer who does this. And she's an Apex trader. She has 20 evaluated accounts that she earns money from. She trades for $200, $300 max. We did that and we knew what times. Let's say you wanted to get in there again. One more trade before lunchtime. 11:48 until 12:30. Another $180. Oh, so what did I do? Well, number one, I only had 4 times I could place a trade. I had 4. I knew what my stops could be too. In this case, the software is saying, hey, why don't you put your stop the average size of a bar plus 50% away? They call this the ATR, Alpha Thomas Radio. The average true range is an indicator developed by a man named Wells Wilder, who lived not too far up the road from me in Greensboro, North Carolina. I think he's in New Zealand now. And he came up with an indicator that everyone uses and says, how can I measure how big a bar is now on average? So if the average true range of oil is 10 ticks, your stop is 15 ticks under that candle. If the market volatility increases and it's 20 ticks, your stop is 30 ticks under that candle. If the market starts to constrict and the volatility tightens up and it's 7 ticks, your stop is 10 ticks underneath there. So ATR is this sort of expanding and contracting volatility measurement. I know where my stop is. I know how long I have to hold a trade. So my target can be time-based. I've just addressed 2 of the biggest psychological bugaboos in trading history that no other system can atone for. You will fail because there's nothing pointing in the future to an analysis 1 second, 1 minute, 10 minutes from now. It's this void, scary, dark closet filled with clowns where anything can happen. And so your deepest fears are now sort of assuaged by this timing analysis, right? Then correctly, here's a new thing that customers learned today. The 1233 signal, Ian, what happened? We finished lower than we started. What might that point to? That might point to the fact that we just experienced the high of day, right? And right here, we finished lower than we started. They didn't have one jumping jack left in them. Go. Wow, the banks that were supposed to go up, they couldn't even go 1 tick up. They fell straight down. Did the trend reverse? I think the trend reversed, right? And it's not just today that this happened. As we go back through US and different US and rather Asian sessions and Euro sessions, if I scrunch up the market in oil, you can see it's not just today, it's not just yesterday, it's not just the day before, it keeps happening. In fact, let's go out to a daily chart and take a quick look at that analysis while we're looking at oil. And watch how we can look at it through a different lens. Ready? Let's get rid of all the drawings on the chart. Same settings, 714.00, swing strength 8. And now, Ian, look. The last warning on oil was up from December 17th until when? January 3rd. Let's take a look. Scoot it over to the right. Now remember, all I have on here is a moving average. No volume, no no acronyms, ISM, LMN, OP, QRS, TUV, none of those methods. It's just time. And what did we learn? What did we learn about the movement between basically a week before Christmas and now? In that span of time, the price went up $4.46. Oh, it's a pretty big move. What did we do in that span of time? Yeah, we broke through all these highs. Yay! We broke through all those highs and never approached the low. Somebody's buying oil. Maybe they're preparing another Middle Eastern war. Maybe somebody has a giant, maybe somebody took pictures of the map and the war plans Donald Trump showed the book author and the publishing company that he swears was just a newspaper article, even though he said on the tape it was that I'll get in a lot of trouble for showing you these. Maybe someone opened up that envelope and said, let's blow up Iran. Iraq was fun. Well, when are they going to jack the price up potentially in the future? All I have to do is look to the right of that dotted white line and see January 13th has been identified by 12,000 lines of code as a potential move up. Well, how far is it likely to go up? Ready? Let's check this out. Well, on September 13th, it went up that far. It went up this far. It went up this far. On this day, it only went that far. Right? So I can see the movements past historically, how far it moved straight up before it reversed. Let's assume that the price is exactly where it is right now on the 13th. Okay, let's make an assumption. Well, now I can take this arrow and 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 say, these are the total numbers of jumping jacks that the banks have done when the clock started historically. Oh, fantastic. Well, what does that mean? It means at a bare minimum on the 13th, I could probably expect us going to $75.68. Or next target up is $77. Then I have two lines right here around $79 and another line around $81. Look at what we did without volume, without candle patterns, without trend lines, without any of the stuff that's already in the past. Stuff in the past can hurt you if you're trying to make a guess about the future. It's manipulatable information. Take an hour and listen to any financial network. Listen to Fox News, listen to CNBC, listen to Bloomberg. And every person who speaks says two things: the reason the market's going to go up and the reason the market's going to go down. They never commit. Well, treasury bonds, blah, 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 inverted yield curve, investors could go to the moon. We do also suspect it may drop forever. I asked somebody who's regularly seen on Fox Business if we could get on the show. And he said, well, they invite people back whose forecasts are generally very accurate. I said, I gave you the moves for gold for the last 6 moves. 6 out of 6 of the dates were perfect. And he told me something I never forgot. This was very recently. He said, you have to explain to people in fundamentals why your analysis says what it says. So if my indicator says oil is going to go up, I have to literally say, based on some report somewhere that we believe it's going up. I can't say that market manipulation patterns tend to indicate a rise from 74 to 79 before January 21st. Nobody will believe that part of it. But you guys believe it because you can see it, right? Let's take a look at gold on a daily chart. Whoop. Any questions so far? Oh my gosh. These are the forecasts I sent to the guy, by the way. The guy that appeared on Fox News, there were no bars on this chart from here to here. I can show you the email that's date stamped that has all of these times in the future, Earl, Ian. And I say, Mr. So-and-so, to prove to you that our stuff works, here are the dates for the future. And then I wrote him an email later and I said, hey, by the way, Mr. So-and-so, what happened on the 13th of September? What happened on the 3rd of October? What happened on the 15th of October and the 5th of October? No follow-up, no phone calls, because you can make more money selling subscriptions to your newsletter than you can if you actually sit down and want to see the truth. It's hard. It's easier to lie to people or tell people what they want to hear than it is to see what's actually happening, which is that this market is based on time signals. So what's going on with gold right now? Let's take a look at the chart. On the 9th, which is today, we have a sell signal. When is the next time to consider taking a long position in gold? It's the 20th. What has happened at the last selling signals in gold? It's fallen. How far has it fallen? It fell this far. It fell this far. It fell this far. It fell this far. So what can I do here? I can do this. I can do this. I can do this. I can do this. Okay. Now, if it doesn't do that, how do we react? If it doesn't do that, how do we react? Well, let's bring a little bit of information to the party. We see we have a trend line right here, right? We'll use conventional wisdom. This is what people are watching, right? What if it comes up and closes above that trend line? How embroiled with time do we want to get? Well, let me just pull out here and ask you guys a question. How does it feel knowing you have this tool that less than 0.1% of traders even know exists? It feels like there's an element of control involved, right? I feel like the first time Isaac Newton figured out that gravity was 9.81 meters per second. And he said, hey, if I throw the ball this fast, it lands in my hand at this time. If I throw the ball slowly, it lands in my hand this time. If I throw it really hard, it lands in my hand 6 seconds later. And now we have the equation force equals mass times acceleration. Ah, math. We can plug different numbers in, and I don't throw the ball in the air and it goes to the moon. It can't. There's an element of control involved. There are rules. And now it's for the first time we see that the market has a time-based rule. And now all of these signals are in the future. Is everyone tracking okay so far? Anyone left behind or confused? Anyone have any questions about anything I've said so far? Because I want to lean into something a little more complicated for existing customers, if that's okay. Is anyone lost, or does anyone have a question about a specific market per se? Are we good? Can I go a little bit down the rabbit hole? Going once, going twice. Okay, cool. Now, I figure out, the more I study this, that there's another element to our timing. There's a condition that occurs in time cycles that the more you see it, the more you realize there must be an explanation for this. And I'm sure some of you have noticed it if you've used the software for a while. I sent out a free training video series on it to bring you up to speed. And I want to show you in a diagram if I can. Here we go. Back in March, I realize there's a condition in timing called inversion. What do I mean by that? I mean that most of the time you get to a buy dot and it goes up. You get to a sell dot and it goes down. You get to a buy dot and it goes up. You get to a sell dot and it goes down. One of the best parts of my job is showing people that this exists. And so I can make a post yesterday. This was on Facebook. Holy choppy McChop, Batman. I had a feeling they would pull a Pelosi and sneak the move in, the big move, when no one was looking. Drew some channel lines from the 60-minute chart on top, and when we got to 12 o'clock, there was zero follow-through from the expected buyers at that time, and zero ability to close above resistance. Almost no heat on the 3 contracts short at the expected 12:10 move down to the lower channel I've been watching all morning. I have a feeling at 12:50 they might drive it right back up to the opening price, because why not torture us more? And so in my social media, Ian, now I'm tempting customers, I'm daring prospects. Look what happens from 12:50 to 1:35. I said it's going to go right back to the opening price. And here's that same condition we saw on gold and on oil. At 12 o'clock, Earl, what does it do? It finishes lower than it started. Is this the end of the uptrend? If so, maybe we sell at 12:10. And now we know, looking at the chart hours later, what happened at 12:50? Right? This is a real world example. Where did it go by 1:35? Right back to the opening price. So the ES literally drove from 59.25 all the way back to 59.62. Are you serious? That's almost $2,000 per contract with no heat. It went straight up from the close of the candle. That's normal. And so on my little charty chart here, what you're going to see is a blue wave. The blue wave is we get to a sell signal and it drops. We get to a buy signal and it goes up. We get to a sell signal and it goes down. We get to a buy signal and it goes up. That is what we call nominal or normal polarity. All is well with the world. Back in April, I have a nervous breakdown, more closely to February, March of last year. I literally lose my mind and ask my business partner and best friend of almost 20 years, am I losing my mind? I have the Skype, I can show it to you. It was around 11 o'clock at night when it hits me. About 25% of the time, the market doesn't do that. Near trend reversals, in fact, it does the following. It goes up, it goes down, and then it keeps going down, and the signals reverse. Now at a selling time, it goes up. Now at a buying time, it goes down. 25% of the time, the signals go into a reverse polarity condition. What? Yes. Well, okay, what am I supposed to do with that? I will show you when that in fact happens very clearly. Let me see if there's a condition. Here, Ian, check it out. And this may happen in oil, but I'm certain oil is going higher. Ian, what does the market do from the close of the price on February 28th for gold? Goes straight up. That tells me that I'm on the opposite wave. I'm in that 20% of signals, 25% of signals, where we're in a sequence of reversal. In fact, I've started to document what this looks like with my answer key. Those of you in my pro training room have access to my answer key. And Ian, I want you to see the sequence. Ready? If you've watched the free training video, you know. When we get to a sell signal that goes higher and higher and higher, we call it a rapid acceleration sell dot. And it looks just like this. You know what happens? It happens sometimes. It's a natural part of market movements. In an uptrend, the uptrend is never over until you get to this sequence. Rapid acceleration sell dot. Rapid acceleration sell dot. It's the precursor of a trend reversal. So when I see this, I know an accelerated move is coming. Higher close, higher close, higher close. And then Earl, what follows? If everything is going backwards on the 28th, Waleed, what can I expect the 9th to do? What can I expect the 9th to do, Tim, if the 28th shot straight up? Go the other way. And in my live classes, I'll tell people when we're backwards, and now I expect the market to drop from March 9th until when? April 4th. Ian, what do I expect it to do now on the 4th? Well, on the 4th, we're still in a backward sequence. Look. We're still in a backward sequence. The green dot goes down, the buy dot goes down. Well, if the buy dot goes down, Ian, what does the next sell dot do? According to the answer key, it's going to go up because it's backwards. Because there are rules that markets have to follow that are based completely on time. There's a sequence where markets invert. And the inversions occur near trend reversals, near places where the market is getting ready or trying to go in the opposite direction. Is anyone having trouble with this? One of the ways that I like to think about this is I have these little small magnets, right? And every magnet has a north pole and a south pole. A north pole and a south pole. But what if I take a ginormous magnet? I don't think I have any here. Magnet. Alan, when I put that big magnet that small magnet in a huge magnetic field, I can flip the poles, right? How many of you know that the Earth's North Pole and South Pole flips? Historically, we've seen that the North Pole and the South Pole flip. Right now, I forget how many miles it's diverted from its actual position in the North Pole. It's changing. It'll actually go, ah! It's part of nature. So now I've got this answer key that says, hey, there's a point where we get to where we're going up, we're going down, and then it keeps going down. Oh, rule number 2. Ian, rule number 2 tracks what I'm showing you. Rule number 1 and 3 are from Ron. Rule number 2 is the real deal, baby. That's pure 100% Michael. So now we have this answer key that says you are here. 228, I'm here. Oh gosh, it's going up until the 9th. I can hold on to it. And then it's going to drop until what? The 8th. I'm sorry. It's going to drop until the 4th. And then it's going to go up from the 4th until when? The 18th. And then it's going to do what? Go down. And boy, that sequence sure looks a lot like this sequence, doesn't it? Oh my gosh. No gurus, a piece of paper and a document or an ebook. No volume, no MACD, no ISM, LMNOP method, no candle patterns, no free ebook. Markets do this because they're based on time. What did Gans say? Time is the most important factor of all. He's right. Okay, so bear that in mind with me now as we go take a look at the E-mini S&P daily chart. Erase all drawings. You're doing great, by the way. If you've been tracking this far, congratulations. You're killing it. Can you see the screen okay here? Now for this chart, if you're a customer, I'm using the 1230 swing strength 5. Those are nominal settings. So Ian, stay with me, ready? 10-9, we're good, right? Yeah. 10-21, we're good, right? Yeah, push us down. 11-22, we're good, right? Yeah, uptrend preserved. 12-4, we're still good. What happens on the 25th? Uh-oh. What happens on the 25th? It's backwards. If it's backwards on the 25th, Robert, what is it likely to do, or what was it likely to do on January 2nd? Based on what you've just learned here? We just jumped the tracks, dude. We ain't on the blue wave no more. We in 25% land. Okay. And so I tell everybody, listen, watch for it to go up on the 2nd. Yes, reverse is going to go up on the 2nd. The market literally closes, ready? It closes here and goes as low as 2.5 points before it goes 152 points in the other direction. And at the time, earlier this week, knowing what I know about time, I had taken a trend line and done this. I had taken a trend line and done that. And I don't know if I have a snapshot of it, but I sold the next reverse signal at the trend line. If you'll bear with me, it's kind of all over the place on my chart. Let me scroll down here. I have a lot of drawings, I'm sorry. Nope, it's not in here. Tim, I knew that we were coming into the trend line, and I sold it when we got to the trend line, knowing this signal was going to be backwards. And we're now in a field of reverse polarity starting here. It's backwards. When is it going to go down till? The 13th. So now here's the sequence. Ready? When it's backwards, we mark where the high is. Right there. And in the diagram and in the room, I will tell you there is an emerging trend line. Like that. We go to the answer key. There's our high line. And then Tim, look, our emerging trend line. We will stay backwards until we either close above or close below one of those two lines. If we close below, it generally moves 100% of this gap down. If it closes above, it moves 100% of that gap to 200% up. But right now, we're backwards until the 13th. And it sure doesn't look like it's making a beeline to the high. It can. It can. But this pattern generally appears as a distribution pattern before a trend down. And so I was able to take advantage of it here and take advantage of it here. What do you think about that? In fact, I went so far in the book. I'll get you all a copy. You don't have to be in the pro room. I went so far in the book, Ian, as to draw out what the cycles usually do based on how markets are reacting at those times. Oh, it's a song where the words are the same every time you sing it. Feliz Navidad y prospero año y felicidad. Aha! Feliz Navidad. You hear that song, you want to punch yourself in the face. But you know the words, and the words never change. And so inside the confines of time analysis, we're more like Isaac Newton than Bernie Madoff. There are rules that are based on physics, that are based on universal constants, that are based on things that are eternal, going all the way back to the works of Gann up to me, and who knows what we'll find in the future, that we can superimpose on a chart that seems random and chaotic. You want to see a bunch of caffeinated weirdos losing their minds, get on one of these cryptocurrency Facebook groups for one of these meme coins where they're worth like pennies. And a guy's got $30,000 worth of a meme coin. And he said, "Why did it drop today?" And I sneak in and I post my picture. because it was time. And they don't understand. They don't want to understand because they're addicted to that adrenaline. So let me get you a copy of that book. There's a few other things in there before we get started, before you start reading through it. And if you join my trading room, we reference this book all the time. ADV. Copy link. Can you guys see this Dropbox link where you can download it? Did that come through okay? Tell me if that came through. Okay, great. Now, you can also apply this to your chart with the program automatically. There is an indicator on your chart. For example, if you wanted to watch that pattern, called RevPol, reverse polarity. Click on rule number 2. And Ian, do you see when you click on rule number 2, it says, hey, the 535 signal finished lower than it started. Feels like that reversal sequence is starting. Maybe at 6 a.m. we look for a long until 6:35 and then cover. The polarity switches from a buy to a sell, and from a sell to a buy. And so now all across these signals, you get warnings and alerts as to when those potential things are likely to happen. So if you don't want to read the book or learn, you can just check rule number 2 of your reverse polarity box. This was a daily chart for silver futures, in fact. Any questions so far? Any questions so far about anything we've covered or anything you've seen? The next sell date for silver is on the 17th. On the 17th. We see actually a healthy reversal up out of the low, and the buy signal has been working from January 1st back up to there. Yeah, this works on every instrument. So we can look at the euro US dollar, sure. Tell me about what's happening on the euro US dollar. Well, we'll start up here. Ready? Up here, the blue signal finishes higher than it started. The white signal went down. Ian, the blue signal went up. The white signal went down. We now have what? Our high, and then our lower trend line. We closed below the lower trend line. Watch how we can read this like a book. So right here, this happens in the euro. If you're a euro US dollar trader and we start to pull away from that high, sell it short, because this is the high. And now we're expecting, Ian, if we're up here and this happens, which is here, where is it going? Ah! And what ends up taking place? They're not done with it yet either. Here's the best part. Ready? It goes down at the white, up at the blue, down at the white, up at the blue, down at the white. So Ian, in relation to the euro US dollar, watch, there's the emerging trend line that they haven't closed over yet. We're in the reverse sequence. Started here. And then we'll say it again. It's backwards. What do we have down below? We have a low. What are we expecting on the 13th? We're in backwards land. We're expecting this down here. So we're getting pretty close to the point where the euro starts to go in the other direction. Or we can wait for a cross above the line or a cross below the line for a 100% move down. It might still go down again. But until we get that trigger line above, we're in backwards land. And so the minute it closes under that line, Ian, the best signal on that chart is right here. Whee! Down, down, down. See how it works? There are no bad signals. There's a bad understanding of time. And I had that for 14 years. I believed that some signals were just backwards. I tried to explain them with pattern 4s and 5s and 6s and 7s. What I didn't understand was I was looking at a reverse polarity sequence. And it happens when the big magnet is near the tiny magnet. My belief is, on the daily chart, Ian, this could be a weekly or a monthly sell signal here. That's the big magnet, a weekly or a monthly sell signal. And down here now, we're in the presence of a weekly or a monthly buy signal. And when that gets near our daily time signals, they flip. That's the closest estimate I have as to why this stuff works the way that it does. But the good news is most of the time, it's just normal. Most of the time, it's just normal signals that you can just trust and trade. Easy peasy if you're trading the euro US dollar. No problem. There we go. Yep, you can start to see it on the 62 right here. Rapid deceleration buy dot, up at the blue dot, down at the white dot, up at the blue dot. Here's the low. Here is the emerging trend line. So let's see what happens. Close above this line or close below that line on the euro US dollar tells us if we go lower or if the trend reverses. It's that simple. It's that simple. Now, by a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times, right? Time is the most important factor of all. If you study the past movements of the markets you trade, you'll be able to prove for yourself that history does repeat. And by knowing the past, you can tell the future. Time is the most important factor of all. And not until sufficient time has expired does any big move start up or down, right? That's kind of what we're looking at here today. And I'll kind of finish with this. What is trading? Because if trading is, tell me what just happened, then 99% of what people are selling and teaching is valid. If trading is, what's happening right now, then 99% of what people are selling for too much money from a beautifully decorated couch in their social media studio is going to work just fine. But if trading is a guess about what will happen in the future, then none of that stuff is really going to work. This is what just happened, or what happened a while ago in the past. This is likely to happen next based on modern predictive modeling, right? And when you trade tomorrow and Monday and Tuesday of next week, I want you to remember that there are people in this family of ours. There are people who are customers that have taken that step and said, I want to do it and see if it changes my trading. You're not the first person who's come here to make a decision. You're not the first person to say, hey, let me give this a shot. These are all people who tried everything else. And they said, it's not working. There's a code in the matrix that I can't quite get under my fingers. You get guys like Earl who've been using it for over 10 years that'll tell you time and time again, stuff just works. I'm going to put it on a t-shirt this year that we can buy and sell. People who were tired of doing it the other way took a few minutes to come back and warn the rest of you, be careful what happens when you're successful. I can't fake these reviews. If someone put me in a court of law and said, are these actual customers, or these people actually using the software, or is this your brother-in-law? Is this you writing review after review? I will swear on a stack of Bibles on the lives of my kids. These are real people. Alberto was a pain in my ass. He left 1 star. I put him in touch with our most profitable customer, a man who earned $400,000 from Apex. He took out 2 withdrawals, one for $300,000, one for $100,000, who personally mentored Alberto, who came back and said that Warp was a waste of his time. But by the way, Michael and the staff are great. If I was going to fake a review, I can tell you the first thing I would do would be to take Alberto's review off. And I can't because it's Trustpilot. Woo, that one hurt. That one stung a little bit. But I wanted you to see it because it's real. And it's surrounded by 5-star reviews on either side. So people have already gone before you who've realized that this playing field really isn't level. Every single thing the banks can do to cheat and rob and steal, they're doing. Everything that these influencers and gurus and online mentors can do to get you to click on their picture, just get you to click on their TikTok. The influencers now don't even get paid from their courses. They get paid from their clicks. The game changed. That's what you're walking into every day. And so this is what I want. I want to put you in the seat of an amazing machine that has everything you'll need to compete with the likes of the people who are cheating. I want you to join up with the groups of people that have already started and gone before you. We have a community of users that are in here sharing their results every day, that are in here talking about what they did, what their mistakes were, what they learned. Guys that are in here saying, please hold me accountable today. If I come in here, you're my support group. And this is just one person. This is a trader who's in his early 20s. Thank you, Ian. So those people are real. They're in the Skype group. those are part of your support group here too. And I would love for you to be a part of that. If you want the software, I won't belabor it. I'll just let you know where we are and where to get it. The company is backtothefuturetrading.com. We're a serious company. The founding members, myself and my partner, best friend Ron, are engineers. So we're a little quirky. The program is called Time Warp. It's our flagship product. And if you go to the website, we're updating our website, by the way, soon. Stay in touch for more details. There'll be a place to put a promo code. If you entered the promo code WARPOFF, WARPOFF, William Apple Radio Papa Oscar Foxtrot Foxtrot, it'll take $500 off the price. Jim, no worries. And if you're an existing customer, I want to make sure you get in touch with Rachel or I. Please come to my live room. I had a session today that I'm going to download and send out because it was so good based on support and resistance. Even if you're not a member of that group, I felt like this is something everybody should know. So watch your email for that, and I'll post links in the Skype group too. I think it was a great training session. And just thanks. I believe everyone here today was supposed to find me. I believe I'm here today because people were going to come here. I don't believe in coincidences. The more I study time, the more I realize that we find the things we were supposed to be with, that we were supposed to get to or go through or struggle with or earn into. And so I take it very seriously. I really do. I'm not trying to be salesy here. If you're here, you were supposed to be here today. I hope that I was able to teach you something new, maybe flip a switch to get you thinking a little differently about markets. If you don't want to join us, maybe you kind of have a feel for a new approach or a new attack that doesn't involve the stuff that's not working for almost everybody. That's all I want to suggest. If you are a customer, really dig in, get the recording. It'll be up on YouTube tomorrow. Go back and study what I said. I'll send out again another copy of those reverse polarity training videos. It will transform the way you look at these signals. It's a natural part of how markets move. It's as fundamental as Fibonacci levels are, but it's predictive. Oh, to know what's coming in the future would be great. Would be great. Well, do you want to know the day you're going to die in the future? Yes. That would be great. That would be awesome. Who doesn't want to know these things, these events that are coming in the future? They're knowable, by the way. There are things that are knowable that we talk about and teach that go beyond trading signals. Thank you for your time here today. I hope that I rose to the occasion again. I hope you learned something. I think it's going to be a bananas year. The volatility is going to be off the chain. There will never be as many opportunities this year for small stops and huge wins in these time cycles because of the world events that we're forecasting and we're starting to see, have been seeing take place. If you were waiting for a time to buy the software, this is it. There are opportunities now to earn the price of the software back in one day. If you have 20 Apex accounts, that's $100 in one trade with a micro ES contract in one day. What are you waiting for? What are you waiting for? I love you guys. Thank you so much. Best wishes for the new year. Health, prosperity, community, connection, all of the things. May the wind be at your back. May the sun shine upon your handsome, beautiful faces. May the mountains lay low before us and the valleys rise up to meet us on our way. In agreement with you for peace and prosperity and health and joy, community, friendship, purpose, all the things you want for yourself. I believe with you. I resonate at that frequency with you. I believe it and know that you can achieve it. Be encouraged today. Continue. One more breath in, one more breath out, one more foot forward. You can do it. Thanks, everybody. Have a great weekend, and we'll see you on the other side. Take care. Bye now.